All right, so thanks everybody for joining us today. We're going to talk about stablecoins. Very excited. So when I was prepping for this panel, I was talking to a colleague of mine named Nathan. So he works with me at the block. He's crypto native. He used to live in Latin America, and he told me last week he used Zelle to try to send some money to Peru, where it was immediately frozen for 3 days. And so then he said he's thinking, why didn't I use a stablecoin for this, right? And so like, if Nathan, who is, an editor at the block and crypto native, isn't doing that, we got a ways to go, right? So what do you think where do you think the stopgap is? Like, how do we get the crypto natives of the world and then the rest of the world using stablecoins for payments?
It's a big question. So I think firstly, you have to break down like different types of payments. The example that you brought up is a classic peer-to-peer money transfer movement. And that's something that for a very long time now, crypto has been sort of touted as an amazing solution for. And I think that that is the case. It's one of the use cases that I'm most excited about. I know we'll also probably talk during this session about like merchant payments, how people buy goods and services with crypto, and all of these things are very different. What I think remains very consistent in terms of barrier to adoption is, number one, like the user experience, how difficult it is for people to acquire, to interact with, to use stablecoins. Number two, I think that there's an element of fear around like regulation, which I know we'll also talk about. Yeah. How do I do this safely and securely? And then I think thirdly, it's like, when do we get to the stage where we're using this because it gives us amazing experiences without thinking about it as crypto? And I think that's the point at which crypto is like mainstream. Yeah. Nobody knows how Swift works today. Very few people know how like interbank transfers work. But we use them every day because that's the only experience that we have. And I think crypto can offer something better, but it's still quite a way away.
Yeah, I would echo that point. I think just like the importance of this fading into the background, and just like for consumers, like you don't think about, am I going to use my credit card? Am I going to use ACH? Am I going to use a wire? You just take out your credit card and you tap it at Starbucks. And so I think stablecoins have a long way to go to get to that point. I think one of the biggest gaps right now just seems to be distribution. And a couple of my colleagues will always joke, they'll say, like, hey, can you name 5 publicly traded companies that have stablecoin-enabled wallets? And it's like, give you one, Coinbase, and then like try to name 4 others. It's really hard. And I just think it's like the technology's there that these companies can start to adopt stablecoins, and some like Checkout.com already have. But enterprise like software adoption takes time, and I think over the next 1 to 2 years, you're going to start to see a lot of that base infrastructure set up. You look at like, Shopify is building out all these great merchant sort of like tools already, and it's just I think when stablecoins do get mainstream adoption, it's not going to be this like, oh my God, I'm using stablecoin, but it's just going to start happening because the experience is so much better.
Yeah. So, you mentioned retailers, so let's talk about them for a little bit because, a peer-to-peer transaction, there's automatically trust between the two people who are exchanging money, usually, I guess. But with retailers, what do you see as the barrier there, especially given the regulatory concerns? Like, how do you get them to accept the money? Or the money, I'll call it money. What do you see there?
Yeah, so my sense for retailers is that they like, should I accept crypto or not is not on like their top 20 list of questions they're asking themselves on a daily basis. And I think 2 things that will like lead to a change in retail behavior or retailer behavior. One is just that like having crypto and stablecoin payments enabled in like the existing software products that they use. So it's just instead of like, hey, do I install this new crypto payments application, it's just do I press a button in Stripe or in Shopify, and then I can have this new payment method. And I think that's a lot closer than maybe people think. And then the second is just like consumers have to want to pay stablecoin. You look at like the adoption of like buy now, pay later. It was just there was so much demand for it, and then retailers like ultimately you're not going to turn down payments. And so I think that and for consumer demand, I think it's just it either needs to be in the background or needs to be like a 10x better experience that you can't not do it.
Well, yeah, I was going to say, so what is that better experience? Like, what do you see stablecoins offering to me? Like, if I want to use it to buy, a pack of gum, like, why would I do that?
Oh man, well this is like the question I've been getting since I started working at Paxos 3.5 years ago. But like, hey, when am I going to pay with stablecoins? When am I going to pay for coffee with stablecoins?
Yeah.
Like, if you live in like New Jersey or Brooklyn, probably not in the next 5 years. And so I think that actually one of the big challenges for the industry with stablecoins is there's so many potential use cases. And so people get really excited about like, oh, use stablecoins for X, stablecoins for Y. And I think there are a lot of broken payments experiences in the world. The one you mentioned with cross-border transfers, you think about, hey, if you're trying to like fund a venture investment and the company happens to not be based in the United States, or just different, if you've ever interacted with like the FedWire or SWIFT system, it's like, oh my God, like it is not fun. And so there's clearly opportunities for improvement today. But I think sort of like segments of the industry have to focus a bit more on like, hey, we're going to do this use case first and just like ignore these other ones where, maybe like the current payment system is good enough for the next couple of years.
Yeah.
I think on the acquiring side, when we did a huge survey last year of about 30,000 consumers and 3,000 merchants, and we looked across a really big spectrum of where you see demand and appetite for this stuff. On the demand side for retailers, everybody wants to be able to just offer as much choice as they can to consumers. It helps them onboard more consumers. And so Zach's totally right. Like when their primary acquiring partner just offers a flick of a button to accept crypto payments, I think we'll see pretty like wide adoption of that. Part of that is also enabling the company itself not to have to interact with crypto, right? Yeah. So it's, hey, payment provider, in the same way that today you take care of my Visa, my MasterCard, and all the other alternative payment methods, and you settle me in a single transaction that is easy to reconcile, and I just have to deal with fiat. That's also when people will be more willing to offer stablecoins or crypto as a payment method, because you'll abstract all of that complexity, right? Like, there's very, very few CFOs of big companies that I've spoken to who are like, yeah, actually, I really want to deal with holding this stuff on my balance sheet and dealing with the accounting and the tax and the refunds and everything that goes with it. So it is about like abstracting that complexity. Where I actually get more excited in terms of the opportunity is less on the acceptance side and more on the payouts side. So, great examples there are creator platforms, gig economy platforms, where you're talking about low transaction values, where you're talking about moving money cross-border, which today, if you're a creator on a gig economy platform that's based in the US and you're based in Africa and you got to send that money via wire and it's $100, you're going to end up with $84 in your account at the end of the day, right?
Yeah.
So can we use stablecoins to make these sorts of money movement more efficient? Absolutely, and I think that's where we'll start to see more traction. Likewise, we know that there are parts of the world, we're sat here where it's very easy to tap your phone, or I don't even leave the house with my cards anymore. I get caught out here sometimes because I use my Apple Watch on my phone. And so it's very easy. But there are parts of the world where that isn't the case. And I actually think that those are the places where there's an opportunity to create something even better than the systems that we have, because they're starting from a kind of more of a blank slate.
So I want to change gears a little bit now and talk about regulation. I'm curious, from where you both are placed, what are the conversations that are going on right now? Like, what is the tenor? What is the tone? Like, give us a little bit of insight into, where lawmakers are, and, you guys are the big players in the industry, like where you are in reference to them.
Oh man, my favorite topic these days.
Yeah.
No, I mean, just in terms of, I was like, Paxos, there's been a lot of news lately. Don't have anything specific to say there. We don't, as a matter of company policy, don't comment on discussions with regulators and policymakers, though, find me later. And but I think just like in general, from maybe like two thoughts. One, just like looking at sort of like stablecoins and the role in society long term. It's such an important part of the economy if like this product and this technology achieves its potential that obviously regulators are going to care. And so I think it's, this was like the attention was inevitable. Obviously, it's like hard to predict like how it will come or what will happen next. But I think $150 billion of stablecoin market cap today, $20 trillion of like USD in the world. So it's not even like 1% market penetration. There was always going to be regulatory attention. And then I think from a Paxos point of view, we've always looked at it as we've built the company to be regulation first. We think that financial services have been around for millennia, and in order for crypto and blockchain and stablecoin technology to gain true mainstream adoption, it's going to have to be within existing regulatory frameworks. And so, we remain just like committed to that strategy. And yeah, it's just let's see where things go from here.
Yeah.
I actually think that there's like a very big spectrum of how regulators are approaching this around the world. At Checkout, we're regulated in a number of different markets, and I get to interact with them a lot. And I think that there is, on one hand, there are regulators who are approaching this, and this is not just a regulatory decision, right? This is a policy. This comes from the very top. But there's this sense of like we have an opportunity to create competitive advantage here, to attract people who want to build, who want to use this, and we recognize that this brings benefits to our people, right? This is not just about regulating a technology or a use case. It's actually the observation that we can create something better. And so I think great examples are where you think about Japan and some of the regulation they've created around stablecoins. And so that there are these sort of pockets. And the UK indeed also has sort of come out and said we want to be a hub for crypto. We still work to get there. But I do think that there are regulators that are approaching this very, very sensibly. And the regulation that they create may not be perfect. We may not love it always, but the clarity helps us to move forward as an industry. And so I think like I'm very, very welcoming of this for the most part. Doesn't happen everywhere, but I think that the positive thing is when we start seeing some of this in action at large scale. MiCA in May next year will be in force in the EU. That will start a conversation around like what best practice looks like. We'll be able to learn from some of the challenges. And whilst I don't think we'll ever get to this like global consistency around this, I do think that regulators will start to be able to learn from each other when this stuff is really in the wild, and hopefully develop a sort of like forward-thinking, innovative, but still maintaining the same protections that we need for consumers.
So talking about the United States specifically, I mean, I think I'm going to ask you to answer this first. Given the clampdown that we've seen, just very recently, do you think that stablecoin issuers are going to be able to continue to operate in the United States compliantly?
Yeah, I mean, certainly, I think that's like the Paxos it's making. It's also, I personally believe that. I think to the point Jess was making, that there's a huge opportunity for the United States to just like be a leader on the global stage and bringing stablecoin technology to the masses. I often think it's like, arguably like the U.S. dollar is like the best product in the history of the world, maybe like the only thing better than the iPhone. And so there's a lot to be gained here. And from the Paxos point of view, like we've always looked to like build our stablecoins like within the regulatory frameworks and structures that exist. Again, I'll say this a lot, but it's very early. And so when we launched USDP, our first stablecoin in 2018, the sort of NYDFS, the state financial regulator New York trust model, was like the logical move. And so that's what we focused on. And it's like it seems like plausible that like things will evolve over time, and we want to definitely continue to have a seat at that table and be a pioneer in terms of bringing regulated stablecoins to market in the U.S.
What do you think about the U.S. banks? You think they want in here now? You think this is a part of it?
Well, I would say just like with interest rates where they are right now, everybody wants into stablecoins. But I think with bank, like the adoption cycle there is gonna take time. Certainly, like as like an infrastructure player, I think Paxos, like we've built our platform to enable mainstream financial institutions to really compress like the speed with which they can enter the market. And so, hard to say like who will do what when, but obviously if this is to the use case that you were mentioning earlier of like sending money cross border to Peru, I think the banks are going to need to be involved to really unlock that at scale.
Yeah. What do you think about the banks?
So I think that there's a very different banking versus innovation dynamic that you see in the US versus elsewhere, right? There's a very long legacy of this incumbents lobbying to make sure that they have the seat at the table, and they'll slow things down until they can get to the table. And I think that's a little bit what we're seeing in the US. Elsewhere, actually, I think we're seeing a lot more collaboration between innovators and banks, where we've seen in the EU and in the UK in particular, banks making a lot of investments into startups who are engaging with this stuff, building a lot of proof of concepts, really working to deliver this, both at the stablecoin level, but even further into crypto and things and CBDC too. And so I think that inevitably, as an incumbent in any ecosystem, you want to defend your position and you want to be able to participate in that. That's what you have a fiduciary duty to do as a shareholder. And I think you can look at different models of how to do that. And I think that the collaboration model probably gets us there, maybe a little faster.
Yeah. From where you sit, what geographies are doing it the best?
Again, I think that there's ups and downs of every single one, and none of them are perfect. I do think that the UK and the EU are moving at what feels to me like knowing how long regulation typically takes to make. I think that the progress that they've made there has been positive. Maybe a little overreaching in some parts, and I think that there's still some work to do. But I think some clarity and having something to work around as a framework is really welcome.
Yeah, and I think another country that comes to mind for me is Singapore. And I remember around the Singapore FinTech Festival in November, there was this announcement, and I'll probably get the specifics not perfectly correct here, but it was JP Morgan and MAS issue this tokenized bond on Polygon with a permission version of Aave, and it was just all the Web3 building blocks coming together. And I remember the product team at Paxos, we read the Twitter thread, we were just wow, this is incredible, and it was just a very so you see the largest banks, major regulators really engaging deeply, and I think really innovatively with this technology. And to Jess's point, it's sort of not consistent maybe market to market, but that's life.
Yeah. So let's look kind of a little bit into predicting the future. There's been a lot of things written in media about the end of crypto, and Augustine Carson just said the battle against crypto has been won. Is he right? Let's talk about where we go from here.
My crystal ball.
Yeah.
So no, I don't think he's right. Firstly, I don't think that we would all have the minds that are working on this technology and all the amazing places in this room, people thinking about this stuff, how we build great things. If we wouldn't be here if he was really right. So he's not right. I think the question is how and when do we get to this state that I mentioned earlier, which is where we're all benefiting from this technology without having to know about it, right? We all use Twitter every day. How was Twitter built? What technology stack? Most people aren't going to be able to know that, and that's when crypto is going to be something that people can really take advantage of too. I think on the payments side, there's still a lot of questions out there, right? We don't yet have an efficient way to do things like on-chain refunds that can be automated in the right way. We don't have the way to do pull payments, recurring payments. We're getting there with things like account abstraction, the Visa proof of concept on Starknet. Great example of, really embedding what we really need at a detailed level in the payments ecosystem using crypto technology. So we're starting to be able to build these things, but consumers have very, very high expectations from their payments experiences in developed markets. As I was saying earlier, my ability to do everything with my phone is now something that I kind of take for granted with a single tap. And so we've got a long way to get crypto payments to that. I think where we may start to see traction is crypto-backed cards, for people who want to be able to hold crypto, but use it every day. We're already seeing big numbers go through Visa and MasterCard in terms of these like crypto-backed issued cards. And then I think we'll start to see these things embedded into our Web3 experiences first, into wider like online experiences, and then eventually we'll probably get there for sort of proof of sale, point of sale, physical payment experiences. But like how long does it take until everything's running on crypto? I think it's probably a long time.
Yeah.
Yeah, I mean, I don't know what battle they were talking about, but I think just generally it's still so early that there's just so much potential, and I think just like throughout my time, just like at Paxos and working in the industry, I spent a lot of time just like working with people that were just like non-crypto fintech, and just like more and more you just see all these people that are just have been dealing with like the existing financial market infrastructure for decades, just saying like, oh wow, like there's so many things that can be better here. And 100% to Jess's point, there's like Starbucks or Apple does not want like every single payment that gets made to them broadcast publicly. Like that's okay, reasonable. People want refunds. You don't want to like make a mistake and never get your money back. So there's very clear, I think, business and consumer problems that need to be addressed. But I think there's also just like clear benefits that the technology can bring now. Two use cases that come to mind for me. One is just the idea that like anybody could have like a USD savings account in any country that's just stablecoin enabled on the back end. There's nothing stopping that use case other than like companies building the product today. And then I think we've mentioned payouts a lot, but I think there's going to start to be a lot of where just like, hey, do you want your money faster? Yes, and it just so happens that is delivered with a stablecoin. And so I think there's very, very little from a technology standpoint standing in the way of those use cases. And I think if anything, it's just getting started in terms of actually seeing what the adoption of those use cases can look like.
Yeah, I was thinking about it on my way here. Like, how many years will it have to be until when I'm buying snacks to get on the plane, like I'm tapping, and using crypto.
The thing is, we may actually never know the answer to this, right? Like you'll probably reach an inflection point where that is what's powering your payments, but you don't even know it. So
or I don't care, because I'm like
exactly.
You that I just bring my phone now.
Right. Yeah.
And it's probably going to have to get to that point.
Yeah, I mean certainly like Apple Pay is one of the better payments products out there, and so I don't. I think it's hard to top that from a user experience point of view. Because I'm the one person on stage that still brings my cards places, but maybe I won't. But like what's to stop Apple from paying out to United via stablecoin on the weekends? Because right now it's like the Federal Reserve closes like 6 p.m. on Friday, and then you're not getting paid till Monday, and there's like no reason for that other than it's just like the bank is closed, which all these blockchains are 24/7, and so that seems like a solvable problem.
Yeah.
Yeah. Yeah, I think that B2B use case is a great one. We launched our sort of stable from us as the acquirer to our merchants. We launched a stablecoin settlement solution for that last year, and again, just like the amount of efficiency that this stuff can bring is really remarkable. And so I think anybody who's really building this stuff can really has the opportunity now to reimagine better payments for everyone.
All right. I think that's it for today. Jess, Zach, thank you so much. Thank you all for being here.